Global macro investor and commodity extraordinaire Jim Rogers is one of the many well known traders who's known for his use of catalysts when timing the market. In basic terms, his investment style, as I understand it, is to identify high value opportunities, such as commodities trading below their extraction costs, wait for panic selling, and then identify catalysts for an entry. It's a patient approach, but it disproves the commonly held belief that you can't time the market. But in fact, professional traders like Jim time the market all the time and often with extreme accuracy, and it really comes down to their use of catalysts. And this is one of the driving factors behind their outsized return in comparison to retail traders like us. So the question is, how can retail traders use catalysts to time the market like a pro? What are the catalysts worth paying attention to? And what tools can we track to basically keep up with the most recent catalysts? All right, to kick things off, let's go over the 5 major macroeconomic catalysts that can move major markets like stock, bond, currency, and commodity markets. And after the major 5, I'll go over some catalysts that can move individual stocks as well. All right, number 1, economic data releases. Economic indicators such as unemployment rates, inflation data, and consumer sentiment provide insight into the overall health of the economy. Therefore, they can also help to forecast earnings growth, corporate default, and Federal Reserve policy decisions, all of which affect investor sentiment and market price. And by the way, there's something I've noticed about economic data releases that I'd like to share. That is that the market tends to move in a major way on only really 1 or 2 sets of data at a time. But as economic conditions change, the points that the market pays attention to will also change. For example, this year the market was extremely focused on Fed rate decisions and inflation, whereas next year it could be focused more on unemployment and housing numbers. And if you have any additional thoughts on this observation, make sure to comment down below. Number 2, interest rate changes. Central bank's decision to raise or lower interest rates impacts borrowing costs, consumer spending, corporate profitability, and stock market valuations. For these reasons and more, when the Fed raises or lowers the Fed funds target rate, the market almost always reacts. However, the full impact of that raising or lowering of interest rate isn't necessarily priced into the market for a longer period of time. Number 3, geopolitical events. Political events such as elections, trade deals, conflict developments, and policy changes create both uncertainty and opportunity. These events also tend to create market turns, especially in currency and bond markets, I've noticed, because these markets are heavily driven by geopolitical circumstance. And the most obvious example of a geopolitical event that caused a major market move was the start of the Russia-NATO proxy war in Ukraine. However, other examples include Brexit, the US-China trade war, and when Janet Yellen went to China a few months ago, which caused a major rally in the euro. All right, number 4 is natural disasters and catastrophic events. Unexpected events such as natural disasters, pandemics, or other crises can disrupt supply chains, affect consumer behavior, and have cascading effects on stock prices, as was obviously the case during COVID-19. Other examples, however, include Hurricane Katrina in 2005, which had a major impact on oil refinery and production in the Gulf region, and in 2011, the Fukushima disaster hit the Japanese economy pretty hard and also slowed down investment into nuclear energy. All right, number 5 is currency movements. Changes in exchange rate can impact multinational companies' profitability and competitiveness, affecting their stock price. For example, if the Chinese yuan is falling relative to the dollar, a Chinese company that is participating in international commodities purchases, for example, will experience higher costs as priced in yuan, which affects earnings and future growth. And as a result of this kind of situation, currency depreciation, especially in extreme cases, can result in capital outflows of the country in question. All right, on to individual stock catalysts. Number 6 are earnings reports. These are some of the most significant catalysts for individual companies for obvious reasons. While usually benign, surprises in revenue and earnings usually lead to significant price movements. Number 7 are mergers and acquisitions. Not only can these lead to significant price movements for the stocks and companies involved, which is often the case, but they can also affect other stocks in the same industry. And number 8 is regulatory changes. These are changes in regulations, laws, and government policies that can impact industries and companies. They are especially impactful, for example, in pharmaceuticals, nuclear, and agriculture. All right, now keep in mind that these are just a few types of catalysts that can move major markets and/or stocks. But with these things in mind, what are some things that we can track to stay on top of catalysts? The first and easiest way is to simply stay on top of your favorite news outlet like Forbes, CNBC, or Bloomberg, and track catalysts that way. It's a proven model, but honestly, it requires a lot of attention and it's kind of inefficient. And so for that reason, I'm not really a big fan of this one. So the second method is to simply monitor an economic calendar. For example, here's one on TradingView that I use for economic data drops. Every Sunday night, I simply write down the most important catalysts for the week, and I make sure to stay on top of them as the week progresses. However, these types of calendars don't cover individual stocks, and they really don't cover much in the way of black swan events, nor do they give much analysis into the data drops in question. And in addition, these types of calendars don't really provide much in the way of news or anything really besides just macroeconomic data drops. So for that reason, I also suggest incorporating FinViz's homepage into your rotation for a clean view of major market headlines, individual stock news, and upcoming earnings. And if you're already using FinViz or scanning like I do, then it's a really clean and efficient way to just stay on top of some catalysts as well. But if you're interested in a more customizable and detailed experience, I would consider Benzango, which is basically the world's premier news screening software. And lastly, to get an edge on market timing and to develop a more holistic understanding of what's moving markets and the historical backdrop surrounding the geopolitical environment we live in, I would suggest getting interested in geopolitics. Now, of course, this video is not about geopolitics, but I would recommend following these 5 people. Those are Lynn Alden, Doomberg, Tom Luongo, Matt Arrett, and Alex Krainer. And finally, if you're interested in staying on top of catalysts and trading the market with the team, be sure to check down below for access to my Discord. Thanks for sticking with me, and I'll see you on the next one.